As I had mentioned last week, global stocks are now likely to witness good amount of selling, and this is exactly what has happened. Over the last few days, you must have noticed a good amount of selling in European stocks, in Asian stocks, and now also in US stocks. I believe this selling in global stocks is expected to intensify over the next few days and weeks, and you could expect to see substantial downside from here. Quantitative easing of the Federal Reserve has begun to be tapered off. Substantial amount of tapering has been concluded. Yet there is no clarity on when exactly the US Federal Reserve is going to start hiking interest rates. October is gone, next is December. And here also, although many economists and commentators believe there is a great amount of likelihood that the Federal Reserve may raise interest rates, I do not think that could happen because I think that the world is about to enter into a period of global recession shortly. And in such an environment, you will find that the Federal Reserve will find its hands tied and would prefer to not to raise interest rates for the time being. Not only that, in the next year, in 2016, it's an election year for America. And in this year, normally the US Federal Reserve would be very loath to raise interest rates in the earlier part of the year. One very interesting observation is uh, Swiss, the Swedish central bank, the Riksbank. And they've recently announced a quantitative easing program of 65 billion Swedish kronas. That's a large one. Now, whenever a central bank announces such a large quantitative easing program, normally its currency gets hammered because there's going to be an inflow. However, in this case, in reaction, the Swedish krona in fact rose after the announcement. This is beginning to show that the central bankers, although they have been announcing many quantitative easing programs, but the quantitative easing programs are beginning to lose their teeth, their effectiveness, and the markets are beginning to recognize that. And that is reflecting in the currency values as well. In 2010, the Swedish central bank, the Riksbank, had done an error by raising interest rates rather quickly. As a result, its economy began to swoon. And naturally, it is trying very hard to prevent such an error from happening now. And that is why you find that it is enhancing its quantitative easing program. I believe that there's a great amount of confusion in the world. Many central bankers are not even sure whether they should reduce interest rates or whether they should hike interest rates. And different central banks are at divergent paths. And all this is going to lead to great amount of uncertainty in global stock markets. And the financial markets are going to tumble as a result of this great uncertainty. It is this uncertainty which stock markets dislike most. Stock markets do well in an era of great certainty when you can tell for sure what is coming next. If you do not know which central bank is increasing rates, which is reducing rates, here we have the US Federal Reserve under tremendous pressure to hike interest rates. The Reserve Bank of India is under pressure to reduce interest rates. The ECB is about to launch another wave of quantitative easing. This is a very confusing scenario for the world, and in such a scenario, global stocks normally recede. Therefore, stay out. I think that the selling that you have seen in global stocks is only going to accelerate over the next few days and weeks. So stay out, stay calm, take care, happy investing. Bye bye.